Well, if you're in markets and you're in crypto, the last few months you've probably enjoyed a Trump pump, and you've probably also gotten slapped by a Trump dump. And this afternoon we had a little bit of a Trump dump, but if the Trump dump got pumped by a forthcoming Trump pump, would the dump still dump if Trump pumped the dump? Man, there are lots of questions in my mind. If you're in crypto in particular, you really noticed that Trump dump this afternoon as he tweeted that everyone should get out of Tehran. Tensions in the Middle East are still high, and we're far away from a settlement, but the market really sent a loud and clear message that it is not concerned, being sharply up today after a very tumultuous weekend. And we also saw that indicated by key things that normally react to a crisis like this, like the US dollar, oil, and gold. These commodities and the inflows that we saw into tech and risk-on names like MP and OKLO are telling us that we're in the midst of a bull market, and we really shouldn't fight that trend. And I would argue that we're in more than a bull market. We're in the midst of an AI revolution. You might not see it yet, but in hindsight, I think we will see that this is a big turning point, just like the internet revolution was over 20 years ago. So the music will one day stop, and markets that move against the backdrop like this can often lead to a bubble, but there are opportunities in front of us now, and we should take advantage of them while we keep our head out the window. So let's look at the charts to determine what we can expect in the week ahead. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a wonderful weekend despite all the craziness out there. So this is normally where I would start the show with a joke or do something fun because I like to keep you guys entertained and I like to have fun with this. But I think it's important for us to just acknowledge for a moment that there is a lot of pain and suffering going on in the Middle East right now, and I'm sure we've all seen the horrible videos of the destruction in Tel Aviv and Tehran, and our heart goes out to those people. But we're here to talk about markets and charts and what those are saying about our investments. And I have two sides to myself. I have Trader Tom and I have Real Tom. Not saying I'm not real here, but Real Tom has thoughts and feelings and emotions and could have a very deep conversation with you about all these topics over a beer. But we're here simply to look at the charts. So let's do that. And in the backdrop, we don't want to see suffering or loss of human life. And our heart goes out to everybody that is impacted by this. So for me as a trader, that means I'm slowing my trading this week because I don't like environments like this. It takes away any edge we may have in markets where a development in the news can throw things for wild swings, particularly if you're playing with leverage and perp trades. It could totally wipe out your position, as we saw this afternoon. There were a ton of liquidations in the crypto space. So I'm just pushing the brakes for a second. I'm saying, I'm staying in my positions that are my longer term hold positions. The swing positions, I'm obviously staying in those, but day trading or taking riskier plays, I'm just cooling the jets for a few days to let the dust settle. With that said, let's dive in. And if you do find value in the content, if you could like, comment, or subscribe below, it really does help the channel and it helps get this information out to more people. Despite everything that's going on, the strength in markets is telling us that, at least where things stand currently, they aren't too concerned about these global tensions. And we add to that conflicts like this can often stimulate risk assets because of the associated money printing and stimulus that all trickles into the economy. But I don't suspect that that's what the current US administration wants to see. They want lower inflation and lower rates, and neither of those can happen with the backdrop of a conflict. As for the US dollar, gold, and oil, the US dollar is clearly in a macro bear market, which is good for risk assets, but it should normally go up as these war-related tensions increase, and it continues to weaken. Gold, which is inherently risk-off, sold off today and can't make a new high, and oil continues to sell off after a rejection on Friday. So where does that leave us for the week ahead? Well, we do have to be cautious of any local bumps, hence why I said I'm slowing down my trading for the next few days, but I don't think those will have a lasting or meaningful impact on markets. And then we do need to look to Wednesday for the FOMC meeting, where we're really looking for any dovish signs or indications that rate cuts may be coming, because we'll need that to push past all-time highs in the S&P 500 and the NASDAQ. So let's get into the charts. I'm going to keep things a bit brief today because I went into so much detail on Friday, and while things opened up a little bit, they are down in after hours, and we're kind of to a neutral position to where we were on Friday's video. So Friday after FOMC, that will be the really important time to look at how this week closed out for us. Okay, starting here on the S&P 500, and you can see after that pullback on Friday, we had a strong open today, and we got near the high of the range again. We actually did close well above the 6,000 level on the S&P 500. We did pull back after hours. If you look at the futures charts, we're about here at 6,016, just over 6,000, but we didn't break the low of the day. So the futures charts for this and for the NASDAQ are looking solid. And we need to see what is going to happen in the week ahead with FOMC and with the Middle East. We are, as we said on Friday, fairly toppy on these indices, and the same goes for the NASDAQ. So I'm just going to cover the S&P 500 today. And we need to see, can we push past these previous all-time highs on some good news, either from FOMC or out of the Middle East? And can we get up here and consolidate in a very strong position, holding these all-time highs as support? That would be the ideal scenario. Or is something going to transpire that causes us to correct a little bit and chop around and maybe find support at some of these levels down here before eventually bouncing away in a few weeks' time? If we go to the DXY, and I'm just here on the daily, and let's really zoom in to see what's going on. So you can see we've made new cycle lows as of last week. And on Friday, we did see some strength come in this candle, which is to be expected when things happen on the geopolitical stage, that the dollar as the reserve currency would strengthen. But the notable thing to me is that the dollar didn't show more strength and continues to break down. And actually, all of our candles, see this white line here, have closed below these previous lows on the daily. And now this is the candle for Tuesday. And we couldn't even close this candle within the range of these previous lows. So the dollar, as I was saying in the intro, is in a macro bear market and is showing weakness. And if the dollar continues to weaken, particularly with this backdrop, it's going to be good for risk assets. And as we said on Friday, we're targeting that $96.50 range. If we go out to the weekly range, the reason we're saying $96.50 as a target is because it lines up with this previous consolidation range, all these previous supports here, and this general support zone for this last run up back in 2019. And as a reminder, a support zone isn't an exact price point, it's more of a range. So anticipate somewhere in that range. I have heard calls for, as low as 95.5, but the really strong support would be coming in at 94, but that would be a major breakdown if we go down to 94.3 there. Okay, if we go to oil, and obviously oil shot up quite a bit towards the end of last week as these tensions were rising, but we had a notable rejection on Friday, and then even today as tensions increased, we didn't really close near the high of the range. And so you can see the oil chart is looking fairly toppy. And the thing to note, everybody's saying, oh, look how much oil ran up on this conflict. Well, oil had already been running up for several weeks, and this to me is more indicative of a blow off top. And we know the current administration doesn't want high oil prices, so they're going to do everything they can to resolve this issue and bring oil prices back down. And I think it should be noted too that oil from Iran isn't going to the US. Their main buyer is China, so it doesn't even impact the US market as directly. But obviously OPEC sets prices, and there's more nuance to the whole discussion around pricing oil. If we go over to gold and zoom in, you can see how on Thursday last week, gold spiked, and then Friday it rejected and closed down. And today we continued to reject. It was a fairly neutral day for gold, just down slightly. Silver, in contrast, has maintained its strength, but continues to consolidate. I don't think we need to go to the chart, but again, this is a risk-off asset, and if things are really so bad in the world and markets were really worried about it, I think we would see more inflows into gold. Okay, moving on to Bitcoin on the weekly, I'll just take off that one fib range. And unfortunately, the close I was hoping for on Sunday, above this 50% level of our recent consolidation range at 106,250, we did not get that weekly candle close. So this is a slight sign of weakness to me. Solana, as I mentioned in a tweet, is showing some subtle signs of strength because Solana was able to close just above its 50%. We'll look at that in a minute. But Bitcoin would have looked much stronger to me if we could have gotten that weekly candle closing up here. Still, the chart isn't terrible. We have these two indecision candles, which, I mean, the open and close price, it's remarkable that Bitcoin is acting a bit like a stable coin here. But then today we had a notable move up, and then this rejection you're seeing, this is just the after hours price action as the Trump tweet about Tehran came in. But overall, Bitcoin is holding up fairly well to start the week. And let's see how this weekly candle close does for us. I would love to see us close back in the stronger half of the range here to give me confidence that we are going to continue on up before seeing a correction and perhaps testing that 100,000 or that 98K level down below. If we do look at Bitcoin on the daily, this candle wasn't great, that it wicked below and kind of broke down from our range a little bit, but we've bounced away strongly. And right now, we are just finding a bit of equilibrium, which we often talk about after a strong move up is the most common move we see in markets where we get into this tightening range. So I suspect on the daily, we will continue to tighten and then make a decision. But a pattern like this doesn't definitively point in one direction or the other. So we just need to stay on top of this market. Okay, if we're looking at Solana on the weekly time frame, and I misspoke a little bit, I said the 50% of the consolidation range, but that's not what Solana closed above. We just have a clear resistance and support line here between the $150 to $152 price range, and I wanted to see Solana close above that just to show us a little bit of a sign of strength. We have a similar, very indecisive candle here to what we had the last 2 weeks on Bitcoin, but I do like where this closed. We had a bit of strength today and then pulled back a bit more than we did on Bitcoin on the news and developments in the Middle East. But right now, between this and some other signs on the smaller time frames, what we saw with RSI comparing how oversold it got here to here and the strength we've seen out of the bounce, they're just some very early, I mean, it's early days, but some very subtle signs of strength in Solana that I am hoping will continue to accelerate, and hopefully we'll see a bit of a move in this asset soon. And again, that $195 overhead, that 50% level, is really what we need to get above. Okay, going over to MicroStrategy, and let's go to the 4 hour so we can see the after hours action. And unfortunately, MicroStrategy continues to show a bit of weakness. I'm not necessarily convinced that we're going to break down on MicroStrategy yet, particularly if Bitcoin goes on a run. But right now we are in a bit of support if we're just looking at this local range here. Also, we're getting close to the cloud here on the Confluence model from the double cloud setup. RSI, mean reversion are all in the middle of the range as we said on Friday. This is fairly neutral. I think just as Bitcoin pulled back and the rest of risk assets pulled back a little bit this afternoon, we're seeing that carry over to MicroStrategy. But if we look at Tesla in contrast, and we also go to the 4 hour, you notice we had our daily close back in the range. Where was the daily close? Sorry for the back and forth here. We had the daily close at $328, $329. And we got back into this range that we wanted to be in that we couldn't quite reclaim on Friday. And then have sold off a little bit after hours, just like we have seen in MicroStrategy, but this is normal for the rest of the markets, and I anticipate we should see a bounce soon. But we are getting back into support here. You know, we have this old support line at 322, and that is going all the way up to, say, 327. So we're right into the middle of a critical zone for Tesla. I would love, as a sign of strength, to see it bounce away from here and break these previous highs of this local swing here at 336, and getting us back above 350 would be a great sign of strength for Tesla. But we just need to see how the markets develop tomorrow, and if things are going as we would hope, we would bounce away from here and show some more strength in Tesla. And that would translate over to the pair chart. This is still clearly in the favor of Tesla. And as we talked about on Friday, when you get in this lower third cloud, it normally pulls the price action down for a bit longer. You can see all these instances. Watch the video on Friday, and I really go back and look at all these. But right now, we are just riding this line of the cloud down. And if we get sucked down into this lower cloud in a meaningful way, I anticipate that this pair trade could go in the favor of Tesla a bit longer, which could carry us out all the way to, say, June 23rd to June 25th, just judging by how long some of these other swings have gone in the favor of Tesla. Okay, briefly going to Hood, And as we've been saying, this one is definitely starting to get a bit toppy. I think, we could still potentially hit that target of $83, but if we don't hit it soon and start rolling over, or maybe break this trend line down here, that I'm going to start taking a little bit off the table because I've been in this since the $30 range. But a good sign today is that we had a breakout from this level here that had acted as resistance for a few days' time. And even on the after hours pullback, we tested that for support. So assuming we see a bounce in the broader markets tomorrow, hopefully this bounces away too, and we can eventually make our way up to that $83 target, potentially even as high as like 85 if we overshoot a little bit. But I'm definitely going to trim a little bit of my hood position at that point and then just see where it traces back to. Maybe we come back to the $70 range if we get really lucky. Maybe we go all the way back to this range in the 60s and you could reload that position. Okay, and last one for today, which is Celsius, which we're still anticipating that move up to the $60 range. Again, advise taking profit just a little bit before because everybody's looking at this 50% level. But after a 3-day pullback last week, we had a strong bounce away today. And if we just go into the 4-hour, you can see how this is holding up better than the rest of the market, even with the after hours news. And we are holding the top of that previous range fairly well. So keeping my eye on Celsius because we are continuing to break out. And even though the charts are fairly hot, it still has a bit of room to run. And I would anticipate as we approach some of those targets around the $60 range, that this would turn into perhaps a bit of a local blow off top, but we just need to see what happens. Or maybe it takes it in chunks. Maybe we have a run up and we consolidate in this range and cool off, which would be ideal to build some structure and then try to attack that. So keeping my eye on this one, plan on holding this position longer than I am with Hood. But just to be clear with Hood, there's a portion of it that's a long-term hold position because I believe in the future of it. And then there's a portion that I'm swing trading. Something like Celsius, I'm holding a little bit longer because the chart isn't as exhausted, but this is not a long-term hold for me. This is get to the price target, and then I get rid of pretty much all my position. Maybe I keep a couple shares just because I want to keep an eye on the stock. All right, so that's it for the charts. I would just encourage you guys again to be careful with leverage this week and be careful day trading any riskier positions, as any bumps in the road could really throw off those positions. But also don't be shaken out of solid longer term hold positions you have because of these short term undulations. Of course, you have to do whatever is best for your portfolio and your risk management, but I am still of the mind that this is going to blow over sooner rather than later. I look forward to seeing you guys on Friday, where we're going to have a lot more to discuss in the charts post FOMC and seeing how this settles out. And hopefully we have a peaceful resolution by then. Look forward to seeing you then. Bye for now.